Very, very good morning, everyone. Charles here, Frgnt Daily Chart Analysis, Tuesday, the 26th of May, 26, and the time is 8:30 local time here in Milan. So, had a long weekend, back on the charts today. So, my forecast of the day, let's have a look. Well, the DXY, let's start from there. Why not start from the catalyst? So the DXY, still, in my opinion, operating just towards those highs and lows of that daily range. We take a look to the bottom right-hand chart. That is the daily time frame, and with that said, you can see the price is no longer really in a trend, particularly in the last week or so. We just have the highs of those daily candles and the lows of those daily candles, and when we start to put those onto the lower time frames, we can see exactly what's going on. So as we start to approach those higher time frame points of interest, we are just about tapped into that weekly order block top right hand chart. You can see exactly why that is a position of point of interest. But in my opinion, we are still, it depends how you look at it, to be honest, where we have had price pushing to the downside, and then as a result of most recent weeks price action, or we should say months, we've closed above the most recent, if we call it, that lower high that created this low. So in my opinion, this was either a deeper pullback to have that lower low, of which we can see we found liquidity to actually, in my opinion, support. Now this is the higher low for a potential higher high continuation. So the only caveat to that, of course, is as a result of price pushing bearish, we have left a bearish weekly order block to the highs. Hence a bit of the confusion in the DXY. It's had a higher time frame point of interest to reach to the downside. However, most recent price action is most certainly bullish, of which has taken price there. So what do we have on the lower time frame? So as a side of that 4-hour range, or the daily range that you can see clearer on the 4-hour time frame, we are now above all EMAs of importance aside from that weekly. In fact, no, even the week. Well, it's tricky to call it. If we have a look at the most recent weekly candle close, what's the facts of the matter? The facts are this candle certainly did close above that weekly 50 MA. So, indeed, the thought process, we are now above all 50 EMAs. And what I mean by that is, let's say the 4-hour 50 EMA price has most recently broken above it, closed above it, so we're expecting rejection from the 4. In terms of the daily 50 EMA, we are most certainly, if you take your attention to the bottom right hand chart, we have closed above that daily 50 MA, looking to reject it towards the upside. And then top right hand chart, you can see again much of the same. We have now closed above that weekly 50 MA, so looking to retest it for that higher high continuation. So anytime price now looks to dip down towards the lows, my thought process is that, of course, the DXY would be bearish on the way down there. However, my higher time frame bias will always take precedence, and I have the understanding that I am higher time frame bullish up towards those highs, at least back up towards that weekly 50 MA. Let's say price drops down to this point of interest on the 4-hour time frame. I have the confluence then that for this week I'm expecting price to want to push and close above that weekly 50 MA, and so on and so forth throughout the daily and the 4-hour time frame. So that's the DXY in a nutshell. Now, looking through the charts, we can have a good understanding of what to expect based on those higher time frame analysis, particularly GCAT. I like GCAT. Price had made those highs, looking for a higher low. We failed to make a higher high, much like on the DXY. Rather, we've now had that break towards the lows, which in my opinion is now the first low in the market, followed by that lower high, lower low continuation. And you have to ask yourself, well, does that make sense based on what's going on the lower time frames? Can I see some significant breaks of structures on the 4-hour time frame as well, just to have a better gauge of price action? And absolutely, you can see how price is pushed up from these areas, just like on the daily time frame. It's just better illustrated, in my opinion, on the 4-hour. This is now the break of structure after that lower high for that lower low continuation, and then we can see where we might want to be looking to manage those positions by as a result of price now breaking and closing above that 4-hour 50 EMA. Much like the DXY, we can see in terms of the shorts, we are against all the higher time frame 50 EMAs. So it's, in my opinion, is to manage down to your most restrictive EMA, which would be the 4-hour EMA. And I'm just hoping for a break of structure on those lower time frames, look for a pull back into the highs, and then I'll look to take a beautiful short there on GCAD. What I like at the moment in terms of this 4-hour order block on that 4-hour time frame, yes, it has been mitigated many times over. However, the 15-minute order block is still very much so available. So we've got a couple of things to think about, particularly if price does not tap into that 15-minute order block that's still available up at those highs. First thing that I'd like to see, first and foremost, if we don't tap into that 15-minute order block, is price break some structure points. And what I mean by that is, of course, price was trending higher highs, higher lows have made that higher high. So here becomes a structure point as a result of the most recent point where price made that high from. So I'll be looking for price to seek to break that higher low, create me a first low in the market, pull back, hopefully up into this 15-minute order block. But if we fail to do so, I'll have to wait for some confirmation up at these highs, see if price will allow me to develop a 15-minute order block by way of bearish 15-minute engulfing candle, and then I'll look for something like so. Of course, that's drawn to exaggeration, but you get the picture. Price breaks down, pulls back up, and then off we go for a nice short there on GCAD. So that's just one thought process on GCAD. I like GCAD, the fact we've got good range down to the most restrictive area, which would be that 4-hour 50 EMA. Well, I will, based on that 4-hour time frame, be looking for a bit of a rejection from that area. However, as I seek to find reason for price to want to reject that area based on points of interest, higher time frame analysis, there isn't much there for me. Of course, if I go towards that daily time frame, have a look what is in around that area of the 4-hour 50 EMA. Of course, there is a daily order block as a result of price just pushing bullish continuously for a duration of time. So there is a daily order block. Once we look to refine that area down, you can see here there is a 4-hour order block. Well, I'm yet to put that in on the charts. I'm just going to be working with the EMAs. In terms of the long position, well, that's definitely something to think about as well. But as I say, if you were to put just an order block here, then the first question is, well, why not use an order block here as well? So I want price to develop first and foremost towards the upside as well as the downside. I won't be taking long positions just here into that higher time frame order block. If price is going to come down, then here is my favored position for a long, rejecting that weekly 50 MA, the most recent 4-hour order block, in my opinion, that has created. First of all, we get that high, which breaks the 4-hour 50 MA with pullback, and then after that move, I'm looking for price to come back down to where the most recent move has actually taken off from before looking for that high. Then once we look to refine that area down on the market, we're just here. Does that make sense on the 15-minute time frame in terms of where price has taken off from? In my opinion, absolutely it does. So I won't be aggressive here either. As a result, price starts to come down. I'll be looking for price to tap in, break some structures, pull back, and off we go to the high. So lots of good plans set for the week ahead. Let's just hope we get those breaks of structures intraday and then pull back to those points of interest before short. GJ, looking at GJ as well, more inclined to look and wait for the longs from the lows and shorts from the highs. Nothing in immediacy, as you can see. I've notified this position here as high risk just because it's a 15-minute order block, not based on any of the higher time frame bias or analysis. So with that said, I need price to develop first and foremost, particularly if it comes into the area of breaking the highs. If it just comes back down, then I have to wait for something along these lines before looking for that long position. AU also in the mix today, potentially. This 4-hour order block definitely has been used many times over, but the importance of it, previous weekly high, was trading within that higher time frame weekly order block as well, looking to short out of that region. And my most important thing is, of course, on that daily, we've made that high from the area. We've broken that bullish structure towards the upside, where I'd be looking for price to have made a higher high from. We failed to do so at the moment. So in my opinion, this is the low in the market. Pull back potentially a little bit higher for that lower high before that lower low continuation. But again, with that said, EMA is all against price action at the moment, aside from that weekly where we've got good range down to the lows for that weekly time frame. However, here and now, it's one that I have to be a little bit tentative on. I can definitely understand why, if we do get a bit of US dollar weakness coming into the market, I do foresee that price on AU is going to push slightly higher to my better point of interest, looking for the short up at these highs. However, in the immediacy, just like all of the other cross pairs, waiting to see if we can have a break of significant, intraday perspective before looking for a pullback into the area, confirmation, then look for the short. So at the moment, I'd much prefer if we broke and closed below that 4-hour 50 EMA on the 4-hour time frame. Give me definite reason to then look for the break, pullback, short down. Now, using the 4-hour 50 EMA in favor as of the short post a 4-hour candle closure below that 50 EMA and write that down towards the daily 50 EMA, where if you looked at the daily time frame, what is price doing around that daily 50 EMA? We are respecting it towards the upside. So I'll be expecting a rejection to the highs on AU at the moment until, let's say, that we can have a daily closure below that area as well. And then, of course, we'll be on side with the 4-hour by the time we get there, on side with the daily. And then, of course, after that lower high, lower low, and then we'll be looking for that continuation. So it's all looking good at the moment. Coming back from a bit of time off, it's always nice to see the charts starting to have that type of alignment that I like to see. EU much the same, looks good. 4-hour point of interest failing to break and close above. Of course, just like the DXY, if the DXY does roll to the downside, I can absolutely see a reason and where price could look to push up towards those highs for those a better shorting position. But at the moment, as we can see, price is in that area, so therefore, pardon the noise, balcony open, central Milan, you get the gist. Motorcycles every morning, but nevertheless, we're looking for that break of structure, pull back into the higher time frame point of interest before looking for that short position down, and that also makes sense in line with trading out of a weekly order block. GU, again, much the same, took a GU short pretty much this morning, to be honest. This was a best area for me last week, I should say. So last night, didn't go to bed too early, stayed up, had a look to see how Tokyo would open. We had the break, pull back into the area, and just took the short. Simple as that, to be honest. And I figured, well, you know what, it was last week's best point of interest. Let's stick to the bias. Let's see if my bias is correct. A very low risk short on that at the moment. And to be fair, that will be locked off at break even at some point shortly. And then I'll look for the break, pull back up into that higher time frame point of interest again, where I just have better confirmation of not taking out break even by then, and I simply just look to compound the position. I like the position a lot, but again, just like I've mentioned, based on that DXY, with DXY weakness, you can absolutely see where price is looking to go. Reject the daily and 4-hour 50 MA back up towards the upside for a better shorting position from a higher time frame point of interest. As I said, it all looks good, it all looks clean. There's a good understanding in the market, and I think here, based on the DXY, US dollar CAD is a nice indication of what the potentials are, just like on all of the other cross pairs, to be quite honest. If price is looking to continue bullish, that's a DXY also pushing bullish up towards those highs. Do we have reason to understand why price would want to push the highs? Absolutely. We've got that higher time frame weekly order block. I've refined it somewhat. It was this large at the moment, but I was feeling that was enticing me to anticipate shorts a little bit sooner rather than later. If you can see, if I superimpose this on all intervals, you'll have a look to see the larger area. First and foremost, it was like that. So at this stage, I'm already sell biased based on the fact that I'm in that higher time frame point of interest and looking to refine those areas down, and having the order block that large would prevent me from taking continued longs on US dollar CAD. So I'll refine that weekly order block down to an order block that has been mitigated. However, when I seek to refine that area down anyway, you can see refine within that area. We've got that daily order block up at those highs. So I'm waiting for price to gravitate up towards those highs for a nice looking short position. And then with that said, that is giving a good indication as to, do we have DXY strength to come into the market? If so, where can we look to go? And as I've said, up at those highs. So that's US dollar CAD, long story short. And of course, if we do get the DXY weakness coming out of the market, won't be looking for any immediate shorts. Want to see some structure points broken down to the downside before looking at taking shorts. And as you can see, price made a high from this area. So the key structure point, in fact, would be this area just here. Wait for that to break, pull back, then look for the short continuation, and using DXY as a full confluence for that. And then UJ, what do we have on UJ? UJ, again, another good indication to suggest DXY strength coming out in the market. Got that range, in my opinion, was still range bound on that daily time frame. However, that range is now supported by daily and 4-hour 50 MA. So, looking for price to look to the downside, I feel that's quite unlikely. If we are to go to the downside, looking to reject that daily 50 MA towards the upside, again, is there a better position to look for a short? Absolutely. If you just have a look at the daily time frame, look at that daily candle that caused that bearish engulfing, took out all of those weeks worth of price action, days worth of price action rather, refine that area down. We've got ourselves a daily order block. So of course, if price comes back up to that area, I will indeed be looking for an aggressive short back down towards the most restrictive EMA. At this time, looks like the 4-hour 50 EMA. So that's a bit of the rundown. That's exactly what I'm looking at today. Lots and lots and lots to digest. Coming to the market, my first day since Friday, and to be honest, last week was a very slow week as well. As you can see, price is pretty much still around those areas that price was noted at last week, so not too much movement. And that brings me on to say, a bit of a reminder, we are trading in, I wouldn't say testing times, but there's a war going on. If there is a good or a bad time to be looking at trading, uh, this would be a nice indication of if you can trade in these times, and you can certainly trade in the most better of times. So just stick to your guns, stick to your trading plan, stick to your analysis, risk reward, and that way trading becomes a hell of a lot easier if you can use the DXY to the best of your ability, since that is a catalyst for me trading all of the cross pairs. And absolutely, if you can understand the DXY, if you could trade that and mark that chart up or that index up as you were looking to trade it, I believe trading becomes a lot easier when you're looking to trade those cross pairs. Wait for DXY to show its hand. Once the DXY shows its hand, that's when we can look to get involved on those cross pair trades. And I'll leave it there, team. Thank you very much for your support across all the channels. As always, appreciated. That's 15-minute, bit of a breakdown of what I'm looking at this morning. As I said, could be a potential busy day. No favorites as of yet, but we'll look to refine this watch list down as the day starts to roll on. All the very best, everyone. Good luck in your trading journey. Take care. Charles.